We are slowly coming to the end of the price action module, and what I will show you right now is a very great and kind of unique approach to the market. When you are just using the two things in your charts, and I will show you the 1 week of trading in EURUSD and 1 week trading of Nasdaq. And these things generally work very good in the trending environment. And if you are going to be in the ranging environment, then this won't work at all. So you really have to be able to understand what environment are you in, and to be able to benefit from them, because you can really get caught in the chop, which you can see, for example, right here, and you will really just be losing money. So first thing first, these are basically two custom scripts made by two very good traders, which I personally can recommend you to follow on the Twitter or on the TradingView. And the first one is called the Monday Range. This is by the trader XO, and the second one is called the UTC Daily Open by the J. Conrad C. And you will find both of these in the indicator sector. There are in the public section. This will just find your levels better, so you don't really have to bother with them too much. And anyway, yeah, my setup here, okay, you can pause the video and you can set this up the same way I have, so we will be kind of on the same page. This is for the UTC Daily Open, and this is for the Monday Range. Okay, I have the lines with breaks, and I have this in the black color. So let me start with the Daily Open, and the idea of this right here is, for every candle, okay, it doesn't really matter if this is the weekly or daily or a monthly candle. What is actually happening, is that if you have a, let's say, weekly candle which is bullish and looking like this, you have a wick below the candle, and the wick means that at some point of the week we were trading below the open. So this candle was actually red, but at at the one point at the week, price broke above it and started trending higher and closed higher. So if you have a bias for a week and you generally just don't want to jump into the trade as the market will open, you will use the weekly open strategy to kind of let the market do its thing, and entering the market once it will decide that it really wants to go the way you made in your analysis. Also, the second thing, I talked about this previously, if you're gonna right click your chart, go to the settings, and you have your time zone set to UTC. So because what this indicator will do, and these gray areas are the weekends, and the line inside them is the weekly open. Okay, this is where the market is opening at the week, and as you can see right here, I'm gonna draw the lines here. Okay, I will make them in a purple color, and I will do this for every trading week we have here, and I will do this for this one, and I will also do this for this one and this one. So you can immediately see that in this trading week, market opened and price was just generally on Monday. Okay, these lines right here, they are your day separators. Okay, so this is the Monday, this is Tuesday, this is Wednesday, Thursday, and Friday, obviously. And you can see that on Monday nothing really happened, and you are waiting for some sort of signal that market really wants to go the either direction. So on Tuesday you can see that we violently broke below the weekly open, and we are currently in red. We are trading below, and you just want to go with the market, and you have your support here, and you can short these touches right here, and you are getting in the short, and you are able to ride this move all the way down to the market close on Friday, in this case at least. So very basic example, weekly open and the weekly open strategy. Basically, once again, the purple line is, or whatever line you use, is your weekly open. Let's say you are bullish for the week, so you are expecting the price to go up, but what will happen in most cases, price will start trending down. It will create a wick, but once it will break above the weekly open, you are kind of waiting for a retest on the lower time frames, and you are getting inside the trade. On the second week, but you can see that, this is one of the things I talked about. We are in the ranging week, and this is not working at all, okay? We are below, above, below, above, below, and then, we will spike below. Then on Thursday, we rallied. This is mostly caused from some higher time frame level, but you have to be careful for these weeks to happen. Then we have very weak, trading week, when market will open quickly, just push above, in first 4 hours, and then it's below the market open. And once you are really seeing the weakness in the market, you can look for the daily patterns, to get into the short trade, and this would play out nicely here. And the last trading week is, as you can see, market open right here, price quickly just dipped below, but on Monday immediately break above. This wick right here on your low time frame is your retest, and we are pushing higher. The same thing what you can do with this is you can use the daily open. Okay, so let's say, for example, for this particular day you are bullish, so what you want to do is, this line right here is your daily open. In Asia, session market is below, but as London opened, we are pushing higher. Then we have this big sell-off before the New York will open, but you have your small demand zone right here, and you are going long here. Ideal case obviously is if we are going to test the daily open, which didn't happen here. Let me just quickly check if there is a day. I don't really use daily open this much, okay? I'm more sticking to the weekly open to give me the direction for the whole week rather than just day. But as you can see right here, they will open, market will push higher, but then quickly start trading lower. We are gonna test the daily open as resistance and sharply sell off. Okay, and yeah, basically the same case here. Even though prices start trying to break above the daily open, it's failing to do so. We have an over and under pattern here, and we are going lower for the day. The second thing you can add to your trading tools is the Monday range, and a lot of people will tell you, and I am one of these people as well, that I am much more comfortable to let the Monday play out. Okay, I don't really like to trade on Mondays. Sometimes, for example, this week, if you could really open long as market open in London, and you would be in a big profit for the whole week, but this is not very usual case right here, what you see this week on Euro. We have a lot of news and stuff like that. Anyway, what this indicator by TraderXO will do actually is, it will mark out the Monday low and Monday high, which are, the extremes basically. The highest point of the Monday is here, and lowest point of Monday is here. And as you can see, on Tuesday we broke below the Monday low. We tested this, and this was more precise test than the weekly open right here. This is in correlation with your support I showed you a minute ago, because the support is at the Monday low, and you are shorting here. The second week, you wouldn't find anything good here, obviously. Like I said, that is not working great in the trading weeks. The week after that, on the other hand, market on the Tuesday we were below the Monday low. We entered quickly inside the range, but then started failing and breaking below, so you can short inside into this move, and you will find your short entry. This week is interesting. The Monday range was huge on EURUSD, and what a lot of people are using with these is the 50% of the Monday range, which is, you can use your Genbox, the same with the ranges. I will talk about this in the next video actually. So you will see how I'm setting up this thing right here, but this generally is the 50% of the Monday range, and you can see how price tested the 50% and pushed higher. Okay, but I will show you kind of better things to do. We have demand zone right here. Very quickly I will slap my profiles here as well. We have naked POC from Monday. This is getting tested. I like to use this more than just the 50% of this range, but anyway, still the Monday range and the weekly open in the trending weeks will give you a huge edge on the on the direction, and you will get a lot of confidence in the trading this, because once price is really established above or below weekly open on like Tuesday or Wednesday, we can expect that it will continue with the direction till end of the week. In terms of daily opens, you can use them. Sometimes it's good, sometimes it's just don't. Price will fluctuate around it, and you will get kind of chopped out. But I would be sticking to weekly open if I would be in your place, as some beginner or someone who doesn't really trade with these concepts for a long time. The second case I have here is the Nasdaq 60-minute chart, and same thing over and over. Okay, the Monday was sorry, give me a second. This week was kind of crazy in the Nasdaq. We had a huge Monday range, and we were inside this Monday range for the whole week. So when you have basically a huge Monday range like this, and price is really not running away from it and just trading inside, then this is nothing you can use. Okay, if I'm gonna compare this with the euro right here, okay, basically price was still pushing higher, or at least trying to do so, but Nasdaq, basically the Monday low was also low of the week, so your high probability trade here would be a long inside this demand, for example. Okay, then just playing these levels, your target could be the weekly open. Even though if you're trading indices, this is kind of thing which I generally use as the more of an area, the weekend open, because obviously we have the different openings at the CFD than the more of a traditional market. So but Monday range can work great here. The second week, we had a weekly open somewhere here, price immediately was below, so you can say that shorting is more favorable in this case, as long as we are staying below this line. Monday range wasn't really any use to it. I didn't want to for this video show you some perfect example, but more of that it really depends on the trading from week to week, because these are not my standalone strategies. Okay, these are just my kind of probability enhancers. So I will show you how things really are, than just cherry picking some examples. But on the second week, shorting here would be more favorable. Obviously, day trading on Tuesday and Wednesday would be such a pain in the ass, because you would get really chopped out. But once we kind of broke below, on Friday, you had a good trade below the Monday low, and also on Thursday we broke the Monday low, and you could short this immediate retest. Okay, right here. Okay, it would have to be really quick, and you would have to use lower time frames, but this is kind of what it is. The next trading week, on the other hand, this was very nice one. Market open, Monday was up, Tuesday was up, but then we broke below on Tuesday with the micro retest. Once again, right here we are below the Monday low as well, and you can short until the rest of the week. with price action being once again pain in the ass a little bit, because we, before we made some leg lower, we were inside this channel, we took out this high and then shorted. Okay, indices right now very hard to trade, very challenging market this one is, because yeah, all these tweets and things going around. And last week on the Nasdaq, you can see market opened, we were down on Monday, but then we broke above. We also broke above the Monday high on Tuesday, and you have the demand zone right here. You can just long the retest on the Wednesday, and if you were holding this trade all the way up to now, this would be amazing trade for you, because this is how your stop would look like, and this would be 6-hour trade. Anyway, so the quick lesson about the weekly open above about the Monday range. I will just draw the diagram very quickly. This is your Monday range. The idea is that market will on Monday make some high and make some low, and then you are generally waiting which direction will market go. If we are going to break above, and oh my god, I didn't want to do this. Sorry. So Monday high, Monday low. If we are going to break above and return to the Monday high, you will see the bullish price action in lower highs, lower lows, your demand zones right here. You can have some price action patterns, for example, but generally on lower time frames, just look for higher highs and higher lows. You can get in a long trade and continuation up to the week. The same goes for if we are going to break below on the retest. You want to see some weakness, rejection candles, bearish market structure, things like this. You can short this and continue your week the lower. The second thing, the weekly, daily, monthly open. What I am highly recommending you at every week, mark out the 0 GMT with a straight line as your weekly open, and at every month, mark out every new month, mark out the monthly open. Monthly open works great. Sometimes people are surprised at the levels where market is reversing, but a lot of these times this is the monthly open, which is very pivotal level for the price. So mark out your monthly open. How you are going to do it, obviously, is you are going to go to the monthly chart. You can see that, for example, for this month right here, we have a low of this candle, which I didn't. You can use the magnet tool. This will automatically stick to the body of the candle, and you have your Monday open marked out. Sorry, monthly open. Okay, in this case, obviously, beginning of the June, so monthly open was the same as the weekly open, and you can see the thing I talked about: break, immediate retest, then retest into the demand, and then very strong move higher. But overall, you are marking your levels, and intra-week, if you are bullish, you are letting the price do its thing below the weekly open. Once it will break, then ideal retest. Once again, higher highs, higher lows on lower time frames. Looking for demand or supply zones, looking for reversal patterns, anything you will find. The Fib tool, like I said, there's a lot of things you can use, and you didn't even trade with the volume profiles yet. Okay, there will be a lot of times when there will be the POC, there will be the value area high, low, lot of these things. So we are overall looking for a strength and continuation up for a week. And obviously the other case is that we are bearish, price will break below the weekly open. Usually highs and lows of the week are made on Tuesday. This is something I learned. It's not always the case, but it can be the case that Tuesday is can be the high of the day for a week. So push above, then break below and retest bearish price action, and you can go short. This goes for the monthly, weekly, and daily opens. Use whichever suits you. Okay, but you can see, for example, on this day on Nasdaq, you would get your ass kicked at this day. most likely as well. Sometimes price will just run away from you. Okay, there will be weeks when market will open and price will just spike up or down. There will be days when market will open at 0 GMT and price will spike down as well. If you have any questions, I will be posting these scripts, these indicators in the group, so you can find them there. And yeah, this is the lesson about these two things, which are, you know, connected to the different types of days and the weeks. So I think this will be it, and I will see you in the next video.